And we're seeing the Shanghai Gold and Silver Exchange, that is really exploding in terms of numbers of contracts being traded. It's gone from almost nothing a year ago to, I haven't got the figure. Obviously, it's still very small compared with Comex, but it's been a huge, thousands of percent increase in a year.
Yeah, yeah, no, I agree. And someone has a question here. I don't know if you've heard of this, Clive. It's came out a few hours ago on X. Eric Young, King Kong, he reposted it, and it was a video by William Still or Bill Still. He did a documentary years ago about the Federal Reserve, and the question is, why did J.P. Morgan move its traders to Singapore? So the speculation, because Bill still doesn't have the source, but I think he's legit. It's a legitimate headline and story. Apparently, Clive, on Thursday, the J.P. Morgan bullion dealers from New York, they were moved to Singapore to trade from there. And the reason the premiums are so high, Russell, in my opinion, is that the volatility in gold and silver is going up, and the dealers have to protect themselves. Is that the way you see it, Clive?
I think that's a bit of it, but also there may be something in the fact that the Comex futures stopped trading for a while on Friday. And that meant that the people who are traditionally in the market shorting silver, suppressing the price through Comex, couldn't do so. So the only trading that could happen was the spot market, i.e., people physically buying silver, physical supply and physical selling, because there's no Comex trading. And I think that's what contributed to the spot price shooting up. And of course, if you're a dealer and you see the price jumping, and it jumped by 5% on the day,
Yeah.
5.7%, I think it was. If you see the price jumping by 5.7%, what are you going to do? You're going to adjust your price because it might jump another 5% the next day.
I agree. And what do you think about that Comex incident? I personally think it's suspect, even though they're saying it's a technical glitch. I think they stopped it because silver was breaking out, and they stopped it for 6 hours, Clive. They could have run the backup. They didn't have to wait 6 hours. But anyway.
It was certainly a very, very long outage. And I have an app which displays prices of silver.
The timing of the COMEX trading halt raised eyebrows. Officially labeled a technical issue, the interruption occurred just as silver began pushing through key resistance levels. During those hours, price feeds across platforms flickered between inconsistent values, adding to speculation that the outage had suppressed or magnified market pressure. Whether glitch or intervention, it exposed how dependent global metals pricing remains on centralized systems. For traders operating in the spot market during that window, volatility looked unprecedented, fueling debate about transparency and resilience in one of the world's most influential metals exchanges.
On my computer screen, and it was jumping around all over the place. 1 minute it was displaying a price of $53. Next time it was $55. Then it's back to $50. It was kind of all over the place. So I don't know what was happening, whether they were switching the machine on and off or what. But
Yeah.
something was definitely going wrong.
Yeah, yeah. And Clive, don't know if you've seen, and refresher for the viewers. So the title today is Gold and Silver Will Become the Pillars of BRICS and Associates Monetary Order. So who are the associates? Well, the associates are places like UAE, where Dubai is, Saudi Arabia, Kuwait, and Qatar. And they are associate BRICS members. I think they will eventually join, but right now they're on the fence a little bit because I don't think they want to alienate the Americans. But eventually, I think even the Americans might become associates of BRICS, in my opinion. And I mean, I've been told for the last few weeks that these central banks are buying a lot of gold and silver. And we saw, Clive, and I'll bring this up here. You've probably seen this. Let's see, where is it? A week or two ago, that Dubai, they've minted the biggest silver bar on record. It's 1,971 kilograms.
Wow,
Yeah,
that's a big
and
bar.
yeah, and the reason why it's 1,971 is not because of when Nixon closed the gold window, but
Uh-huh.
even though it was, but it's when Dubai, I guess, or the UAE got independence from, I guess I think the UK was in charge of the UAE.
So that's
So
nearly 2 tons. I mean,
yeah,
who's
2 tons.
gonna?
The global monetary landscape is shifting as BRICS nations expand their influence through new alliances and commodity driven strategies. Middle Eastern powers, including the UAE, Saudi Arabia, and Qatar, already major energy and investment hubs, are emerging as associate members aligned with BRICS objectives. Their goal: establish parallel financial structures not reliant on the US dollar. Several of these countries have reportedly increased purchases of gold and silver, signaling strategic diversification. Dubai recently unveiled the world's largest silver bar, nearly 2 tons, underscoring its intention to position itself as a metals powerhouse for a new multipolar financial order.
And
Uh,
what I'm hearing, Clive, is
who's going
that
to carry that?
yeah, what I'm hearing is that Dubai and UAE, they're going to be the center for silver for the BRICS and the world, I would say. I think the LBMA is going, they don't have much silver left. It's been a complete fiasco, unfortunately, for them. And we know, Clive, and you know already that China and the Shanghai Gold Exchange, they're opening vaults in Saudi Arabia, Singapore, Hong Kong, and they want like the countries in BRICS and and also these associates to be able to transact and how can I say, when they have a surplus in yuan, for example, they can sell it for gold, and they're also supposed to build a repo market, not with treasuries, but with gold. And I wouldn't be surprised if there's a repo market in Dubai for silver. You've seen the news, of course, that India is going to make silver collateral for loans, which is basically a repo, kind of a repo from April next year. So, what's your take on all this?
Well, I think it's inevitable that systems which are similar to what we've been used to dealing with only in the United States are going to evolve outside of the Western countries. The countries are starting to realize that they can compete, and now they're realizing that they should compete. Maybe not because they want to be a competitor to America, but more because they need a way to access these minerals generally. And I'm talking not just silver and gold, it could be anything. They need a way to access things, and they need a way to transact between themselves in case their route to dealing in a commodity via dollars gets shut off. So it's only normal that these markets should start to develop. It'll take some time for them to evolve to the size of the American markets, but I think it's coming.
From the Shanghai Gold Exchange's expansion into Saudi Arabia and Singapore to India's decision to allow silver as collateral for loans starting next year, a new infrastructure for precious metal backed finance is forming. Many developing nations are building channels to settle trade using gold or silver instead of U.S. treasuries. Some are exploring gold based repo markets, systems long dominated by Western institutions. This shift reflects a growing desire for financial sovereignty and protection against sanctions or disruptions in dollar-based trade routes. The once Western-centric metals ecosystem is now fragmenting into multiple regional centers with increasing influence.
And we're seeing the Shanghai Gold and Silver Exchange, that is really exploding in terms of numbers of contracts being traded. It's gone from almost nothing a year ago to, I haven't got the figure. Obviously, it's still very small compared with Comex, but it's been a huge, thousands of percent increase in a year.
Yeah, no, I agree. And someone has a question here. I don't know if you've heard of this, Clive. It's came out a few hours ago on X. Eric Young, King Kong, he reposted it, and it was a video by William Still or Bill Still. He did a documentary years ago about the Federal Reserve, and the question is, why did J.P. Morgan move its traders to Singapore? So the speculation, because Bill still doesn't have the source, but I think he's legit. It's a legitimate headline and story. Apparently, Clive, on Thursday, the J.P. Morgan bullion dealers from New York, they were moved to Singapore to trade from there, and I
Well,
don't know if it's true, but
Mario, that I can tell you straight away, that does not pass my plausibility test. I mean, if it's true, I'll be absolutely astonished. But this is not the sort of thing which sort of happens in a surprise tweet on X. It's the sort of thing which would be prepared by the market
yeah,
months in advance. Everybody would have known about it for months.
it's not a tweet on X. It's a report on YouTube, but it probably was. I mean, what he's saying is that that's when they moved there. Maybe it's been prepared for months, but if it's true, I think it could be that well, they want to have a presence where the action is now, and so they have to go to Singapore. Who
Yeah,
knows?
but saying it happened suddenly on Thursday or whatever,
I'm not sure if he said.
it can't make sense. It just that doesn't make
Yeah,
sense.
I agree with you. You can't move a whole department in one day without any notice, but because people have families and children, and but maybe they've been planning. Who knows? But
While you're doing that, Mary, I'll do a quick. Let me see. I'll ask. I don't know, Grok or
I don't think
Perplexity.
they'll know anything. I've already checked online, but
Okay, where can I go?
A recent rumor claiming JP Morgan relocated its metals trading desk from New York to Singapore circulated widely, but evidence remains unconvincing. Large institutions rarely move critical operations without months of preparation and clear public disclosures. Still, the idea gained traction because market participants recognize Asia's rising importance in metals trading. Singapore has become a major hub for bullion storage, refining, and settlement. Even if the rumor is exaggerated, the underlying trend is real. Trading liquidity and strategic decision-making are gradually pivoting toward Asia, where demand growth and geopolitical alignment continue to reshape market priorities.
Hadi Himur says, when do you think the international financial reset is going to happen? I think it's been happening already. A reset is a readjustment. And the fact that the gold price initially and now silver as well are going up, that's a reset. And the reason why I say that is because we don't have a fixed rate regime of gold and silver like we used to prior to 1971. So the market performs the reset. Yes, there could be some big announcement, but I think the powers that be will allow the market to reset itself. And the
Well,
reset, yeah, go ahead, Clive.
well, the reset I think is coming in Europe anytime soon, and I'll tell you in a minute why. But I just brought up the from Grok. Grok is a good answer on this
Yeah.
other question. Grok's answer here is no. J.P. Morgan has not moved its entire gold trade desk from New York to Singapore, let alone doing so last Thursday. This claim appears to be a viral rumor originating from a November 30th video by conspiracy theorist Bill Still, which has spread rapidly on platforms like X, formerly Twitter, Reddit, and Free Republic. Still's video speculates that the move was an overnight flight tied to alleged market manipulation, ongoing US trials of former JP Morgan traders for spoofing precious metals, and a desire to escape regulatory scrutiny, framing it as evidence of something big
Yeah.
like gold suppression.
Yeah, I'm
Then
not. I
it
mean,
goes on to say there's
yeah,
no official announcement. There's skepticism.
yeah.
Da da da. There are lots of reasons why it's fake.
Yeah, I don't know. I think we'll have to wait. I think there could be some grain of truth to that, but maybe not the whole desk. Clive, someone complained about your screen. Do you think you could turn it
Yeah,
off?
yeah, sure.
Yeah, yeah, that's better. What does a reset mean? Well, a reset is like when you reset something, you adjust it. That's what it is. And I think the fact that gold and silver, yeah, the system needs to be reset because there's so much debt, and the only way to do that, right, Clive, is to keep the debt cheap, and you do that by letting the price of gold go up.
Discussions about a coming financial reset often sound dramatic, but in reality, resets unfold gradually through markets. not declarations. Rising gold and silver prices already signal a recalibration of confidence in fiat systems burdened by debt and monetary expansion. Europe may experience its own shift sooner than expected. The European Central Bank is preparing to roll out the digital euro, potentially capped at €3,000 per wallet. Such a system could redirect funds away from smaller banks and trigger liquidity strains, echoing past crises. As digital currencies expand and trust in institutions fluctuates, gold and silver are increasingly viewed as anchors in a changing monetary era.
And silver as well. Is that the way you see it?
Certainly, inflation, high inflation of the money supply is one way to reset. In other words, you expand the money supply by a sufficiently fast rate that you can repay the maturing government debt. But I think the other way which is coming is related to the euro now. We've got the digital euro arriving next year and then in full-fledged in 2027. And they're going to limit that to 3,000, probably. They haven't decided definitely, but probably it's going to be a limit of 3,000 euros per wallet. And if your wallet receives more than 3,000 euros, which of course it will for many people, that will automatically be swept into your bank account. Now, what that's basically saying, it's only a question of time before they say all transactions will have to be via your digital euro wallet, which will mean obviously the bad things that we already know about. They can control you, they can see what you're doing, they can limit what you're doing. And the way they get, the worry they've got, and the ECB knows this worry, is that a lot of people will fill, not very rich people, but the man in the street will fill his wallet with the maximum, or as much as he can, which would be 3,000 euros. And that money will be coming out of the smaller banks in Europe, the retail banks. And that will cause the retail banks a big problem of funding because they'll have a lot of money coming out of them in short term. They reckon the amount which will be going into the wallets will be 10% of all deposits, but that will be heavily focused on retail investors who've got basically a small bank balance. And the small banks will have a problem because of this, because they'll have money going out where they've lent money long term on car loans and mortgages. So the small banks will then have to go to the big banks to borrow. But there's the problem, because the big banks are going to be quite nervous about who they lend to in such an environment. It'd be just like 2008 all over again, where nobody trusts anybody else to lend to. And so the dangers are that this has a repercussion where it starts to cascade from one bank to another. And that's when we might see restrictions or controls put on how much you can have in your wallet. So they'll have the ability to pay negative interest rates if they see this happening, to discourage people from having too much in their digital wallet.